When we think about security, what's the first thing that comes to mind? For many Indians and investors around the world, the answer is simple: gold. Gold has been seen as a symbol of wealth, stability, and security for centuries, especially during times of inflation, financial crisis, or global tension. It's hailed as the ultimate safe haven. But is gold truly as risk-free and reliable as its reputation suggests, or is there more to the story? Let's dive into this video. Hi there, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So we often hear gold described as risk-free, an inflation hedge, or a wealth preserver. And yes, there's some truth there. Gold tends to shine brightest during periods of uncertainty. For example, during the early months of COVID-19 in 2020, gold prices surged to record highs. But soon after, prices cooled, and by 22 to 23, gold briefly dropped below $1,700 per ounce. Anyone who invested at the peak might have faced years of flat or negative returns, so not exactly the smooth ride we expect from a safe asset. So while gold does protect in certain situations, its journey isn't always predictable. So gold's reputation as a safe asset partly comes from history. In India especially, where past capital controls limited access to global investments, gold became a trusted store of value. But on a global scale, gold's performance has been mixed. Unlike stocks or bonds, gold doesn't generate cash flows, earn profits, or pay dividend or interest. Its price depends largely on investor sentiment, which can be extremely volatile. Even during crises like 2008, gold prices first fell sharply before later recovering. So the key insight from this is gold feels safe, but it doesn't behave consistently like a safe asset. And one of gold's biggest selling points is its supposed ability to protect against inflation. But history shows that this protection isn't always reliable. Between 1980 and 2000, a 20-year stretch, gold's price declined even through inflation persisted. So over extremely long periods, say 100 plus years, gold might retain purchasing power. But for most investors planning over 20 to 30 years, equities and even bonds have historically outperformed gold after adjusting for inflation. In short, gold can help during certain inflationary periods, but it is not a consistent or guaranteed hedge. So what's driving the demand now? Gold's recent rise in value hasn't happened by accident. Several important factors are at play. First, central bank buying, which is countries like China and Russia have been steadily increasing their gold reserves. Why? One reason could be to reduce reliance on the US dollar, especially amid rising geopolitical tensions. Even India's central bank, the RBI, has added to his gold holdings recently. So the strong demand from national institutions lends a certain credibility and momentum to gold prices. Next is the psychological comfort factor. Because you see, gold isn't just an asset, it's an emotion. During periods of uncertainty, whether economic, political, or social, people naturally turn towards what feels familiar and trustworthy. And gold offers that emotional assurance even if its price movement isn't always smooth. And also, currency dynamics matter. It is important to remember gold is priced internationally in US dollars. So when the dollar weakens, gold prices often rise in dollar terms. But for Indian investors, there's a second layer, the rupee strength. If the rupee weakens against the dollar, you might benefit even more from holding gold. But if the rupee strengthens, part of gold's international gains might get cancelled out. So the key takeaway from this is gold returns for Indian investors are influenced by both global gold prices and currency movements. And it's worth gently questioning whether gold is truly safe in the way it's often portrayed. Number one, volatility exists. Gold prices can be surprisingly volatile. There have been times when gold fell 20 to 30% over a few months or stayed flat for several years. So while gold may feel emotionally secure, financially it can experience real ups and downs. Second point, no income generation. Unlike stocks which pay dividends or bonds which pay interest, gold generates no regular income. It simply sits there, its value driven by external factors. This makes it less effective as a wealth creator, especially over long periods where compounding matters. Third point, practical considerations. If you hold physical gold, there's a need for secure storage and sometimes insurance cost. If you invest through gold ETFs, you will pay annual expense ratios, though small, and sovereign gold bonds offer interest but come with lock-in periods. So all these nuances are important to factor into your decision. So should you invest in gold? The short answer, yes, but wisely. So a smart strategy is consider allocating 5 to 10% of your total portfolio to gold. It acts as a buffer during extreme uncertainty but shouldn't be your primary growth engine. And for growth, you can focus on equities and business ownership. Historically, businesses have outpaced inflation, created jobs, paid dividends, and generated compounding returns over decades. So gold can preserve, but stocks and mutual funds can grow. So the bottom line is gold is special. It's deeply tied to our history, culture, and emotion, and it has rightfully earned its place as a store of value. But when it comes to investing, it is important to view gold with clarity, not just sentiment. Gold is not truly risk-free. It simply behaves differently from other assets. So use it wisely, mix it into your broader strategy, but don't build your entire future around it. Because true financial security comes not from one shiny object, but from a thoughtful, diversified plan. So do you want personalized advice on how much gold you should hold and how to balance it with equity and debt investment? Then click the link in the description and book your free consultation with one of our certified financial planner today. Let's build a future that's secure, strong, and truly golden. And if you find this video interesting, give it a like, share, and subscribe to our YouTube channel. I will see you in the next video. Until next time, thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.